All right, so it was quite a challenge for me to put this together and condense everything into 6 minutes without, boring you guys to death. So I just tried, what I wanted to do is put together a few things to give you an idea of what I look at or what I discuss with new business owners or prospective clients, when we sit down and have an initial meeting. So it'll give you an idea of how we might be able to help people when you're out there doing your day-to-day things. You can look for opportunities for my firm and people we can help. So I'm going to cover the basic tax saving strategies and opportunities for the self-employed. So this is part of the initial meeting that I usually have, just kind of touching on some high points and areas where we might be able to help people save tax dollars, which is ultimately my goal when we're talking specifically to taxes. First thing we cover is what's income. Obviously, it seems pretty obvious to people, but there's really two ways you can report income depending on what industry you're in and the size of your business. One is the accrual basis, meaning I report income when I invoice someone, versus cash basis, meaning I report income when I receive payment for my services. Depending on the industry, one may make sense over the other, like a restaurant industry, for example. They obviously don't bill anything, aren't paid at a later date, everything's cash up front. But on the other side of that, the expense side, if we report them as accrual, when a vendor sends them a bill, they get to deduct that expense. So there are some timing things there that we look at and try to find the right fit for the specific business and the industry they're in. And then also there are tax planning opportunities that come out of this. Does it make sense to delay invoicing until the end of the month if I'm a cash basis person and receive payment next year and push that income out? Or did we have a bad year this year? Do we want to capture that income here this year in a lower tax bracket? So these are some of the things we'll discuss at the start of our business relationship. Again, what's deductible? This again seems pretty simple, but you'd be surprised how often I get the questions, can I deduct this, can I deduct that? The general rule is if it's ordinary and necessary in the normal course of your business, and if it's normal for the industry you're in, then it's deductible. If I can make an argument for it being a legitimate deduction, we're going to take it. And there are opportunities here to, through tax planning to reduce your tax liability. Like at the end of the year, if you know you had a good year and next spring you're going to need a piece of equipment, we might talk about buying that before the end of the year and getting that deduction this year. Another question that comes up a lot, or topic of conversation is the vehicle. If we've got a business owner or a small business owner especially, you talk to realtors a lot because they're in the vehicle a lot, and it's a discussion we'll have about, well, how often are you going to replace this vehicle? Do you like the old vehicle that you got? Do you want to drive it forever? If so, we're going to look at taking the standard mileage rate versus, no, I want a new vehicle every couple of years. I like to drive a big vehicle. So then we look at an SUV or a pickup, and there are opportunities out there to expense those types of vehicles up front, or a lot of them up front. So again, we're able to take advantage of a big deduction in year one versus being forced to depreciate it over 5 years. So that's an area that we definitely cover. Meals and entertainment, everybody wants to write off every meal, always, and frankly, it's just, you've got to eat whether you're in business or not. You've got to obviously eat to live. So the bottom line is if the meal has a business purpose, either today or with a prospective client or leads to potential revenue, then we can definitely take that deduction. I encourage people to just simply on the back of the receipt, wrote who they had lunch with and the purpose of the meeting. That just gives me something to lean on if an audit comes, and it's a lot better than throwing a shoebox full of McDonald's receipts on top of the auditor's desk and having to do with that. So, retirement planning, this is obviously a big opportunity. The bottom line is, if you're making money, your business is profitable. Either you spend it on business, make business expenditures, you save it, put it into a retirement plan, and defer the tax, or you pay tax on it. So this is critical for a lot of business owners, and frankly, a lot of them don't take advantage of opportunities. There are plans out there that allow people to put, $50,000, $100,000 away that are really, really generous. And unfortunately, many people don't take advantage of it. As Mark would tell you, I don't think Mark's here today, but so there are big opportunities for those that are making money to defer that tax. And then entity selection, this could be the most important of all of these. And Janet will tell you, I'm sure she sees this a lot, but you know, when it comes to what type of business should I be? You know, does it make sense to be an S corporation, or should I start out as a sole proprietor and convert to you know, something down the road? That's an area where we spend a lot of time typically. If you go to the next slide. Just real quickly, I only have about another minute, but I just wanted to show you, everybody hears about S corporations and not many people know what the tax advantage is. Just real simply, I wanted to cover two scenarios. Someone makes 80 grand and they're a sole proprietor versus someone makes 80 grand and they're an S corporation. The advantage here, the S corporation, is you control the self-employment tax component. So you've got to take a reasonable wage, but that doesn't necessarily mean it has to be all of your profits. You know, depending on the industry you're in, we can talk about keeping that wage relatively low, and you save 50% on the difference between your net income versus what you pay yourself a wage. So that's a topic in and of itself I could spend a lot of time on. But just wanted to cover some of the basics so you know how we can help those business people that you meet day in and day out, and maybe give me an opportunity to talk to them and hopefully help them reduce their tax liabilities. So, I'm David Graff, Bayerkohler Graff Limited, certified public accountants, and schedule 1-on-1 if you want to know more.